Welcome to BearsToBulls.com. This video is the first of many in our weekly series that I'll be publishing on Sunday afternoons, Sunday evenings, for you guys to help get ready for the week. Hope you all had a safe and great 4th. We're coming into a short trading week. But I'm just going to go over, since this is the first video, I'm going to go over kind of what's on the screen right now. You see the boxes, you see lines. I'm just going to kind of give you an overview of what I use. So if we start at the top right here, we have a navy blue or a baby blue line. That blue line is the all-time high of 2126. I plot that there just because we've been hanging around the 2110, 2115 level multiple times. Even with the Brexit move, as you can see right here, we've pulled right back up to, what are we at, 2098. I mean, we're just gravitating towards 2110, 2120 all-time highs, because if you pull it back on a daily chart, you're showing we're almost in a range at this point, which is fine. I love range trading as a trader. It gives us more reliability in the market, whereas if we're on a straight uptrend, it's hard to pick, the points where the market's getting pulled back. You have to time the pullbacks to go to the upside, vice versa. Market's going down. You got to time when the market's going to turn back down. So a range bound to market, I'm okay with. All right, let's move on to the gray boxes. The gray boxes you see, those are standard deviations for the week. Not going to go into detail on how I calculate that, because later on the BearsToBulls.com website, I'm going to allow a subscription service to where I publish my standard deviations and a couple other things that I use to trade. That's yet to be determined. I haven't really thought about price, but it is gonna happen sometime in the future, not too distant future anyways. So to help you guys kind of, as you watch my videos, you check the website, hopefully I gain your guys' trust in my ability to trade, and you find that it's helpful for you. Because if we're looking right now, you can see that the deviation boxes and the deviation lines show to be working pretty well. Let's see, the purple lines are the half deviation moves. A full box is the full deviation range, top, bottom. When I do the weekly recap from last week and the week preview, I'm more than likely not going to have the standard deviation boxes, because that is easy for anyone just to pause a video and be like, okay, he has a line here and a line here. It's easy to plot it for yourself. So I'm not going to use the standard deviation boxes, and I don't think it's all that relevant to have a standard deviation box going forward, because the market hasn't even begun to move yet. So it's going to be right where the price should be, right in the middle of the gray box. If we're moving down on the chart, we've got the volume. Volume is huge. Volume is important. People underestimate volume all the time. New traders come in, they're looking for the end-all be-all. If you see on my charts, I have arrows that point up, arrows that point down. That's not the end-all be-all. That's not showing markets are going to go down or going to go up. Plus, it's a lagging indicator. It's not going to come up the instant the market is turning. I think it shows up after 2 or 3 bars. So it's more like a confirmation on your trade. So if you're going to the downside, so let's see if we can zoom in here. So if we're looking here, back out a little bit. You see here's the Brexit mood. I mean, obviously we all knew the market was going down after the way the Brexit voted, but if it wasn't a Brexit move and I knew the market was going to go down and I started trading here, that's just confirmation that what I thought is correct. So that's what those are. You can find those on the Thinkorswim platform. I can go into them later if you guys have questions. I just don't think it's relevant right now. So if we go down, we got the Fisher transformer. I like having something that shows direction, where the market overbought, oversold. To each their own. There's stochastic, there's RSI, there's whichever one you prefer. I just like this one because it works well with how I trade. I'm a full-time worker. I have a career, full-time job, 40-hour work week. So I want something that helps me with longer-term moves. I don't need something with sharp deciding moves. So if I pull up, see I'm on the 4-hour chart, it allows me to show that, see if we're looking here right now, we're showing that the market was overbought, market's overbought. I mean, that's all I really need to see. I don't need it to be the end-all be-all, again, of indicators. I just need it to confirm what I believe is happening in the markets. And lastly, I always think it's a good idea to have some sort of bands. I prefer the Keltner channels just because it works better with how I trade. There's Keltner channels, Bollinger bands, and you can set it to any way you want. There's many different tools, indicators out there. You just gotta find what fits your trading style. It took me about a year and a half before I found what was what was fitting my trading style. So you can't base it off what I'm publishing. You can't base it off my ideas. I hope I can give you ideas and stuff that can help you find what fits your schedule. But how I trade, what style I trade, what markets I trade may not fit how you trade. So I'm hoping this is just going to give you some ideas, some news, some sort of educational benefit to help your trading needs. I've geared these more towards beginner traders because the advanced trader isn't going to look at me, someone who's been in the market for a year and a half, and take ideas from me. So this is someone who's new, who needs a little bit of guidance, someone who needs a little bit of, um, a little bit of ideas to figure out how to trade. I personally trade on the Nadex platform, which is binary options. Yes, I know binary options have a negative connotation to them, but that's just how I trade. I like Nadex. It has defined risk, which helps me. I can go to work and not have to worry about blowing my account up on a Brexit move. So it's a defined loss or defined profit, both ways. So I prefer Nadex. My trading is geared towards Nadex, but I hope you can take this and mold it to however you like. So now that I've explained kind of how my charts are built, let's take a look into last week. See if I can make this relatively quick. So if we're looking in last week, we have a half deviation move down. I did not catch this trade, although I really wish I had. That moved perfectly to the tick down the half deviation and moved up. As we progress on, or if we look back, you can see the half deviation line is a strong line for trend reversal. I didn't think it was going to hold as well this time around just because of the volume and the volatility and Brexit, but it did. And it completed a 1.5 deviation move altogether with a half deviation down, and then it moved back up to where it started and a half deviation up. So if we're looking from down to up, this is a full deviation move, and then some. We had a half deviation more to the upside, so we completed about a 1.5 deviation move in the market, which is pretty impressive. Not shocked though, because once again, it was Brexit, volatility, volume, everything was there. So if we're looking in the next week, markets have basically recovered all of their losses for all intents and purposes. If we're looking, it could be a few points, 3-4 points, but it has basically recovered all of its losses. So I'm curious to see what's going to happen. I'm not going to be too quick to put in a trade the next morning. Let's see, a Tuesday morning. I'm not going to be quick to put in a trade just because I want to see what the market's feeling. It's the 4th of July weekend. Traders are out on vacation, doing it as whatever they do. So I'm curious to see what the market's going to do. Let's see, I said I work full time, but I'm on vacation this week, so I get to trade a little bit. But it'll be interesting to see how the markets move. I have other plots on the smaller time frames. Maybe tomorrow I can post a video about that or write an article up. But I think for tomorrow, I'm looking for a downside move. We're definitely overextended. And if we take a look here, we've got a down confirmation, down confirmation, down confirmation. Now, that doesn't mean the market's going down. That just means that tendencies are, hey, we're oversold or overbought. Hey, we're getting overbought. Hey, just letting you know we're overbought a little bit. And I think now the market's finally starting to, pull back a little bit like, whoa, hey, we've erased all the losses from last week. And I think it's time the market's going to chill out. So for tomorrow, July 5th, I'm looking to move to the downside potentially. I'm going to get up, 7 in the morning, however early you want to get up. Earlier the better, because then you can catch any market move. If you can catch a market move, your trading day is done. But I'm probably going to get up, 6:30, 7 o'clock, and just kind of see where the markets are at. I'm not expecting huge moves again because volume's not going to be there. But I am looking to the downside just because of last week's 1.5 deviation move to the upside. So I hope this helped and gave you guys some ideas. There'll be other videos posted throughout the week, especially if I do a trade. I want to show you guys what I do. Profits, losses, I'm going to show you it all so it holds me accountable. And you guys know that, or shows you guys that trading isn't 100% winning. 90% winning. It's not even 80% winning. As long as you can win, I would say 65, 70% of the time and cut your losses. Cutting losses is huge. If it's a losing trade, you've confirmed it's a losing trade. Cut your losses. There's no sense in staying in a trade and losing all of your money, losing more than what you want, more than you need. Just cut it loose and move on to the next trade. I've done that before. When I use Nadex, I usually use a 1.5 to 1 or 2 to 1 risk ratio. I look for binaries, that have about $25 of profit potential any given way I trade. But you know, if the price moves against me $25, $30, hey, I'm just going to cut my losses and call it a day. There's no sense in losing another $40 on a trade that's a confirmed loser. So sorry about that little tangent there, but I just figured, hey, trading's trading. Just as long as you are in the right direction, manage your losses, you'll be fine. If you have any questions, feel free to email us at bearstobulls.com. If you don't have an email, you can head on over to the site. There's a message center. You can type in a quick message that'll feed into my email, and I can respond that way. So I hope this helped you guys out, and look forward to talking to you again. Thanks.